Hey, everybody, welcome to the show. For many entrepreneurs, I think getting financing is one of the most important moments in our business journey, but it can also be, I think, one of the most misunderstood. I think as business owners, we often see our company through the lens of our passion, our sacrifice, and everything that we've built. Yet lenders are evaluating us through the lens of risk, sustainability, and the ability to repay. So today we're talking about SBA lending, how we can better prepare for financing, why telling our business story actually matters, and what is most often misunderstood about the lending process. So today's guest is bringing a unique perspective because he has spent years helping bridge that gap with a background that combines engineering, technology, and commercial lending. He's helped entrepreneurs just like us navigate complex financing decisions while gaining a deep understanding of what lenders are actually looking for. So joining us today is Shane Pierson, SBA lending expert at Leader Bank and host of the Lords of Lending podcast. Shane, welcome to the show. Forgive me stumbling through your lead-in.
You nailed it. Are you kidding me? No, it's perfect. Thanks for having me on, Chris. I appreciate it.
So you said something that really stood out to me during our first conversation, and that is that you think business owners can be some of the most emotional borrowers because we often view our business as though it was our child. So how have you seen that impact the way lenders approach helping entrepreneurs navigate financing? How is it impacting how you're helping?
So I think that I'll start back to 20 years ago in brief. My first transaction was working on this a Mexican restaurant in Castaic that was a guy who just made some really damn good tacos, right? And he loved it, and his family worked there with him, and he just absolutely loved it. His landlord was trying to get rid of his building, and so are trying to sell it, right? And so he's doing whatever he could to buy this building. Now his business had been growing year over year, but hadn't quite got there yet. And I could see the passion that he had of just wanting to keep the business going. Like that's the emotional element that I think lives within this industry, that it fed his family. His family literally worked there, not just physically fed them, but I think almost spiritually fed them and emotionally fed them. It was their gathering place. That's where when they had cousins come into town and everything. That's where everyone went. So it was more than just an investment property or a guy buying a building, right? That he was going to pay rent and collect some paycheck. So that being my first influence, I spent a lot of time helping him figure out how to buy that building because his business wasn't quite there yet. So discovering ways that he could kind of like milk more juice out of the rock, if you will, it required him to say, hey, I can make some delicious breakfast tacos. I'm going to open for breakfast now. And all of a sudden that new chain of revenue made it so that building was affordable, where he was opening up at 11 and then working from then on. So just like a simple shift on how something that would impact when his family was working. All of a sudden you begin to see how all of this layered into the guy's daily lifestyle beyond just making him money, right? He was trying to sustain a lifestyle, provide for his children, and that depth and what that building becomes for him now is much more than just a building, just an investment. It becomes a way of life for him to perpetuate his family's future. So I think that the emotion that goes into just that initial, literally day one first loan, has impacted how I've looked at nearly every other transaction since. It seems that the larger the transaction and as time has progressed, the more matured the borrower is in their business, it starts to move into this more metric-driven financial return on investment conversation, less the emotion. And honestly, those are the most boring loans to work on for me. I like the one that is the guy that is like, I love my business so much and it's doing this cool stuff for me and I'm getting to express myself. That's the stuff I rally behind. The other ones are just a drop in the bucket. We're just kicking the can down, doing the job. So that emotional element, I think, is what SBA has been built on, the industry that we're doing these in. And its whole sole purpose is to try to help those guys that any other conventional lender looked at that. They don't care that the guy makes good tacos. They want to know, can he pay the bill? Am I at 75 or 50% loan to value, for heaven's sake? And that's the metric they use to decide whether or not to take the risk on somebody, not the story that kind of goes into helping him figure out how to make the thing support the business. So I think that element is where that graduated from and has kind of been my mantra as I've looked at transactions over the years.
So part lender, part coach. You're really
Oh,
speaking into the life
100%.
and helping develop the plan that is going to be what happens with this business. So how much work is on the other side of the fence where you're, say, for this same individual, talking to him about what he may misunderstand about how you as a lender are thinking about his business?
That's a great question too. Early in my career, I would have spent a lot more time explaining what is happening here, what is happening there. Technology in today's world allows me to do that in a couple clicks, right? I can push the Windows key and then the H key and talk to my computer, and it developed this great visual of what I'm trying to create in the mind of the person on the other end of the phone. Doing visual voice call this way, like where we're on Zoom or something else, all of a sudden opens up the ability to get there quicker, to just help them understand the hell that they're about to go through on an SBA deal, which is a lot of paperwork, right? It is a whole lot of paperwork, but the speed at which that happens and understanding of what I'm going to run into, I think, makes it much more bearable. And that's where most people go wrong with SBA lending or a lot of business lending. They just don't have an adequate explanation as to what are you about to put me through. And as long as I understand it, all of a sudden it's okay. That's not that bad. I can figure that out. Okay, I'm going to be asked the same question 7 times. Okay, I'll be ready to answer it 7 times. But if all of a sudden I keep getting asked the same thing and nobody told me it was going to happen, then I'm sitting here at the end like, why do they keep asking me that question? Nobody ever explains why. They just keep digging in. I think something's wrong. Now I become nervous. Now my emotions heighten. Now all of a sudden I'm looking for other lenders because I don't trust this one anymore. Right? So I think that therein lies that another emotional element and when what kind of impacts people as they go through that process and what the psychology is of how and why they work with a particular bank. So did I answer your question? Did I hit that right?
Yeah, no, that does. That answers the question. You've also said that you think it's really important for a business owner to understand the anatomy of the bank that they're working with. So is this part of that? Can you explain a little bit more about what you mean when you say understanding the anatomy of the bank?
Sure. So there's a genetic code. Okay, let's just go with it. I'm going to kill this metaphor, but go with it. There's a genetic code that operates within the anatomy of a bank, and that is we're going to do an SBA loan, and these are the rules by which that loan program has to be governed, right? So that's the base code that supports the anatomy of the bank when decisioning. But what's moving around on top of that is going to be different regardless of who you encounter. Like all of them will put, it's called credit, like lender overlays. Here's your rules. Here's the weird crap that the bank throws on top of it that gets them comfortable with doing a transaction to a business like you. So understanding the depth of that bank and how they're going to look at you and through what scope is at its essence that anatomy. Like what makes them tick. To allow that program to perpetuate in their own environment, so like let it grow and actually do something. So taking the time to know that they're a preferred lender in the SBA or that they have the experience, making sure that they're not so rigid on process and procedure. It seems like the larger the bank gets, the more they try to scale by constricting the rules that allow a loan to pass through it, right? Like they create these little manufacturing lines and there's a stop and a go for every one of them. And if you don't fit that, you don't go through. There's no way around it. The mid-size and lower community banks tend to have a little bit more flexibility, but that lack of rigidity also makes it somewhat erratic occasionally. So knowing that on a smaller institution that I'm working with, there might be a delay. There might be some, I call them the old grumpy person on the other side of that has a pen to decide whether or not the deal is going to work. That's the guy you got to convince, not some algorithm. And so I think that knowing those elements going in and asking the question is the difference between being successful at the other end of an SBA loan or deciding to not maybe waste your time. Like maybe it's just not going to fit. That's not your right lender. And asking more questions is safe in the beginning. It's better than halfway through of a 45 days and you're still not out of underwriting. Like what's going on? Like you don't want to be in that position. So.
Yeah, that's a long time. And it sounds like based on all of the things that you just laid out, that a borrower could have quite a vast difference in their experience, right? Algorithm versus human. And that sort of brings me to the thought around AI in the lending space. So where are your thoughts on how AI is going to be impacting and what's coming for a borrower in terms of their experience when AI lands fully inside the lending space?
Well, right now, just like every other small or like mid-sized, large business that you watch on the news, everyone is trying to figure out a way to integrate this tool that's supposed to be revolutionary and speed things up, make everybody a whole lot more money. I mean, a bank, believe it or not, especially the smaller, is just another small business. It's not anything. It's called a lender, but it's run by mom and pops. Believe it or not. Out of the last 7 banks I've worked for, 4 of them have been privately owned by some family or a couple individuals that are just small business owners, and they sometimes run the bank like a small business. And so they're all thinking the same thing that small business might be: is how can I use this to make more money? Because they're treating it like their baby, their emotional element, right, on how they push through. So as that sits within the industry, every bank on the planet is trying to find a way to automate what is a very mundane, replicative process that's constantly being duplicated over and over by multiple people. And that redundancy has existed in the past and been justified by people saying we do that to catch errors because people will keep catching errors. And it's imperative that when doing a loan that you have the contractual language right and that there's not any story missed. And so in the past, it's always been, I need those redundancies to make sure that there's no data loss. But for AI integrated into that, all of a sudden that starts to get lifted. Like all that stuff can be done, those little replication stuff. And so that transformation is helping banks, in theory, should help them speed up, as long as the guys using it can get there. But one thing that I think is interesting is that I've begun to have more discussions on what impact AI is having on our customers. And so if you think that's the right way for us to navigate this, Krista, I mean, like that's what I'm starting to see is what is the credit team thinking about? And they've said it in particular industries already, like those online e-commerce businesses or marketing agencies and things like that, guys that own those businesses. That's always the question. How is AI disrupting their business? Not even so much yet, how is it helping their business? Because that's always the defense that I have to use when I get asked that question by a credit team is, no, they're using AI now to combat the duplication. They've reduced staff by 40% because now they only need 10 to do the same workload as 100. So I think that question is coming up more often. I think it's important to know that it's slowly creeping in as some type of credit criteria, at least for the next 3 to 5 years, as banks it becomes more commonplace that everybody's got some element of AI in their business. So we want to know, are you using it to grow, or what impact is it going to have on your ability to grow? You know, what's happening in the industry? What are you selling that could be duplicated service-wise by some type of AI agent? You know, Anthropic or OpenAI, stuff like that.
That is absolutely fascinating, and that is definitely not an angle that we have explored on this show before, to my knowledge. So now we're saying, as a business and as a borrower, how are you viewing us if, say, we come to you and we're not using any type of AI? I mean, are you digging? Are you pressing? Where are you taking the conversation from there? And now I'm thinking not lender, but the part coach that we were talking about at the beginning of the conversation. So just like you're helping say, hey, you open for breakfast, you could do breakfast tacos because you do those great, you're increasing revenue. How much are you taking that sort of coaching piece when it comes to AI into and moving the conversation forward?
I've become a prompt coach, believe it or not. I have conversations with nearly every borrower. I'm like, guys, don't spend the time writing me something. Go to AI and prompt with it. Have a dialogue with it. You'll get to a resolution of an issue quicker using OpenAI and its most recent model to try to decipher how to get something to fit right than even I could help you explain. Or I'll open up a web call and say, open up your ChatGPT and let's prompt together. Like, let's literally decide how to do this. And it's funny because when people haven't really been using it very much, and you begin to show them that even how a couple conversations with AI, talking to it, not even having to type now, can output something for you like that you'd pay $500 an hour for somebody else to do. It changes their perspective on what's possible with their business. And so I've seen that happen across the board for even electricians and stuff, that they have rallied behind it and all of a sudden go to AI courses. And now they're instructed, their ability to see the opportunity that exists in their industry compounds dramatically. So it becomes an early stage conversation that I have to try to help them come up with things and start to think in ways differently. And this is my main pitch. Always when you're talking to AI for a small business, ask it to say why what it's telling you to do is wrong, not just why it's right, because it'll sell itself. But I literally say, when you're talking to it and it starts agreeing with you, I want you to then ask it to say, prove it wrong. Prove why everything you're saying to me is wrong, not truthful, and don't stop until you have. And then let's converse on it after the fact. And that's interesting how people begin to challenge their own ideas now. And it creates this critical thinking environment that they think through. Do I really need $1 million in working capital? Or does 250,000 make more sense for me now? And do it in tranches over the next 2 to 3 years. So like the desperation, the emotion can be harnessed by a little bit of logic. And sometimes AI allows them to do that. And so I've seen the creativity around those elements help them make better borrowing decisions, and also just help them get to the path of being like bank ready a lot quicker. Where in the past they haven't known what to do and they haven't really known where to go, and they've always relied on somebody else to tell them, as opposed to just kind of going back and forth and kind of finding a strategy with a tool that's not that expensive to do that with.
So not just a narrative on why they're the best person, right, to run the business or how they're planning to succeed, but really actually getting it to help them challenge their own thinking about the way they're doing business, but then pushing back on that. That's fascinating. So I did have AI compliment me the other day. I pushed back on a recommendation that it made to me. And it said, that's really great that you called that out. And it said, I like that you push back occasionally and that you don't just take the first recommendation that I make. So it was an interesting feeling having AI return a compliment to me on pushing back.
A compliment?
Yeah, on pushing back.
It's a hell of a cheerleader.
Yeah, challenging the narrative. So can you give us an example? Do you have one? No names, of course, but an example of where you've seen the use of AI, as you're explaining, just radically maybe alter what somebody came to you looking for versus what they left with?
Yeah, I think it would kind of reference back to the one I just sent you. They came to me thinking that they needed $1 million to hire like 6 new employees, buy all of this new equipment and everything else in order for them to achieve a goal. So like they say they want all this, and I'm like, well, why do you think you need all of that to make another $2 million in revenue? And as they start talking through it, I'm like, okay, so that's a lot of money to borrow. Here's the impact it would have on you from a monthly payment perspective and the lift. What happens if you hire those 6 people and they suck at their job, right? They can't pull it off, or that equipment breaks. Now all of a sudden you're not producing. Like think through the output. And so then that's when we opened up ChatGPT. I'm like, look, just talk to it for a minute about what you want to do. And I want it to see if it can give you creative ways that it could help you see another way of doing it that you haven't thought of yet. Right. And I literally say that. Give me 7 other ways that this might work besides the one I'm trying to pursue right now, to see if there's an alternative that might be a better suit. He came back to me with a $250,000 request. I talked myself out of $1 million one. Darn it! I'm like, damn you, OpenAI. But no, like the reality is that they put him into a healthier perspective. He's like, I could do this instead. Let's try the next 3 to 6 months, just borrowing $250,000. I can hire 1 to 2 people, get them Claude Enterprise. I pay for them to use that to iterate the things that I need in order they were basically building new leads for their company, and they thought they had to get old traditional salesmanship out there. I'm like, yeah, that can be condensed. And that's what he did. He built it into 1/4 the amount and found a way that he could try to grow using less. And it worked. So we were able to push the loan through, and he hasn't come back to me looking for more money. He got what he needed. His business, the loan is performing. So I think that kind of component, and using that to just use more critical thinking, and not that it gave him the answer, it just gave him a different direction that he wanted to point towards. And now all of a sudden it made it a lot easier for me to get approved. It's a lot easier to get 250 approved than it is $1 million of working capital. So I think that's kind of an interesting perspective.
Do you think that indirectly it's creating more loyalty between your borrowers and you for coming back to you at a future point for additional funds when needed?
Absolutely. SBA is a commodity. So like whether you go to me or any other lender, price point differentiate, like there is a market that drives price in this. And in the end, whether you go to me or to a bank down the street, the sales guy is really, in my opinion, sales guy and the anatomy of that bank are really the only main differentiators. Are you actually getting value beyond just the money from the institution? And if you're not, and you don't feel like there's any added value or them not seeking to understand where you're going, then it's going to be transactional for them just as much as it is for you. And you're going to get treated like just a number. So I think that the moment that I start to think intuitively with them and try to align with the direction they want to go for their business and understand them, absolutely, it makes it all the sense in the world. That's where I'm getting referrals from individuals as opposed to having to go out and knock doors all day for new leads. So I think it is 100% in correlation with why someone would want to work with my institution in the end.
I think that's fantastic. You mentioned earlier that this process of moving through SBA, the experience, being so different, right, from very large bank to a smaller, more, community-sized bank. And then SBA itself can feel complicated. So you have the process and what it is can feel complicated, plus the experience can feel kind of all over the place. But why do you think there's so much confusion about SBA lending? Because it still seems to always be this mythical thing that people don't really understand as simply or as easily as like, hey, I need a traditional loan for something, right? Or a line of credit for something. Why do you think there's so much confusion that spins around it?
It's a one-size-fits-all product. So what that means is this product is built to wrap around, let's say, an infinite number of possibilities of debt. So and every one of those things. So if you came to a bank and you said, I want to borrow, let's say, use $1 million again, the next question is going to be, well, how are you going to spend $1 million? And the reason why, your response of buying inventory to buying equipment to buying a property, getting working capital, buying out a partner, whatever else that might be, every one of those creates a new path of documentation. And so the more complicated the request of use of proceeds, which are all SBA allowed, triggers another batch of directions that the bank has to follow down the line. And so that complication, the math, the algorithm that drives all that documentation request and all of the tasks that need to be performed makes it really hard to understand unless you're in it for 20 years. And even then, you still get surprised by all of that. So I had, for instance, built a system to start mapping that. That's I clocked about 450 different documents that could be collected on an SBA loan depending on the path that you go. But 450 is not from a single borrower. But if I followed that path, I kind of exhausted it down to about 450 different variations of paperwork that might end up getting asked for, and then started creating this algorithm to try to figure out if someone says I need money for this, 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 and this, and these are the people that are involved, and here are the other companies that they have, bloop, it populates, this is what you can expect to see documentation wise. So I have that funny tool. I used AI and spent a lot of time and built that out on the Lords of Lending site. But it has created a really interesting way to understand this is what to expect. So knowing how to navigate SBA is all about knowing what's going to get asked of you paperwork wise. If you have that preempted and you can spend more time just understanding what's going to be requested, the scary dark world of this frictionful world, it kind of fades to the background because its expectations are understood now. So banks that fail to set expectations for borrowers are the ones that create the most hellacious name for SBA in the lending world. It's just nobody's taken the time to help somebody understand the why they're being asked for something or what they were being asked for. They send out an email checklist and leave you to kind of figure it out.
That's a massive list of potential documents.
It's exhausting to even talk about.
I bet. What's the most documents you've ever, the number of documents you've ever had to collect on behalf of a borrower for their application?
Not all of them come from the borrower themselves. So that's what I can say. Some of this is even internally drafted documentation. That's what gets clocked and stacked into that mile-high stack of paper in the digital space. But I'd say the most of it's probably somewhere in the 250 to 300 different PDFs that were in a folder at one time. I think it was about, let's say, over 275. And the reason why is because when you have a borrower that's hyper complicated, and what complicates them, like I said, how they're going to spend money, what categories that goes to, that creates its first friction load. The second is how many companies and assets and things they have. The more assets that they have, the more companies that they have ownership in, the more that exponentially increases. So for every affiliate company that somebody, even if they own, let's say 30 or 40% of the company, we got to get 3 years tax returns, articles of incorporation, potentially. You got to get interim financials, a debt schedule. We need to make sure that thing's never been, that company's never defaulted on an SBA loan. It triggers this path of questions and documents to make sure we understand the impact of that business on our borrower's main business, right? So they own a restaurant, but then they own a liquor store and a hotel and a gas station over here. We just need to make sure they're not sinking ships. They're going to anchor down my business and siphon off cash to keep them afloat. So SBA wants us to go look at all of those, and that's what creates that nightmare of stack of paper that makes my hair gray at 43. So.
What are some of the biggest mistakes that you've seen businesses make before they ever get to the financing stage within the business that knocks them out of contention for SBA?
It kind of lives nuanced based off of what money they're asking for. So I won't go through all of them just because it'll put everyone to sleep. But in the business acquisition space, for instance, management experience, going into it thinking that they're the right fit regardless. Now, banks, they'll look at your resume more than they'll listen to anything you say. So if you don't have an accurately loaded resume or explanation of why you're the right fit for the business going into the gate, they're going to form their own opinion based off what your resume says. So you kind of need to prove that right out the door if you're going to go buy a business tomorrow, right? So once you bought your first business and you're going to go buy additionals in the industry or something adjacent, it's a different conversation. That's a one-line dialogue with the bank, and they're like, cool, he knows what he's doing. But going into something, starting up a business without having any level of direct experience, just a cool creative idea, people get sold on this idea of it's a great idea and they haven't challenged it. Does this really make sense for somebody who's going to invest 90% of the total project cost in me? Like, what do I have that would make anybody want to do that? And don't sell yourself so aggressively into the delusion that you're glorious. Like, challenge yourself first. You might be, but just be willing to challenge yourself and look yourself in the mirror. Use AI to question yourself to know if what you're doing has relevancy. Not talk you out of it. I mean, being a small business owner takes some serious gumption, right? You have to be willing to take risk. But if you're going to ask a bank to get on board with it, you're going to have to explain that. So you got to learn how to sell yourself to the bank. And it's not through a lot of narrative. It's just get to the point. Here's why I can do this. Here's where I'm weak. Here's how I'm mitigating it, right? Strengths, weaknesses, mitigations for it. That's all the banks think about. What are the strengths? What are the weaknesses? What are the mitigations? And so if you can deliver it that way, you're going to get to the finish line a lot faster with them. But if you come at it just everything's a strength, there are no weaknesses, I'm telling you, it's a quick bow out by most institutions because they'll find a way to find them.
So if you're considering, let's say you're considering purchasing into a franchise, like a Subway or a Cold Stone Creamery or something. Those are just two names I know everybody would recognize. How does the process then, change at all in terms of borrower preparation? So obviously they'd want to know if you had any restaurant type experience, but with respect to what you just said about how you're presenting yourself, do you find that most people who are entering into that actually have a full plan for staffing and that includes a manager with a lot of experience? Or do you have something special you're doing with people that come in and say they've never had any experience before, but they have had other transferable business experience that would apply? Does it change anything about the process or buyer prep?
Yeah, as long as they've got it built out a plan. Besides just writing a business plan, there is a management plan within that should be your sole first focus, in my opinion. How am I really going to run this business if I've never done it before? I don't care if it's a franchise or not. And the answer could be, well, the franchise is giving me this training course. I go to a 6-month intensive training course. As a follow-up to that, on a bi-weekly basis, I have a call with a local district representative from the franchise where they help me to make sure I'm following processes and procedures and the SOPs of their franchise, and I'm in brand control. They give me hiring support to make sure I know how to hire. You're looking for the things that mitigate those weaknesses that you should know that you have. And so if you weeded out your weaknesses and then go and address them one by one with either a consultant or a franchise, or I am bringing this person in that helps mitigate that just becomes part of your plan, and you bring that to the front. I'm going to go start this franchise. I don't have direct experience, but I can do this much, and I've mitigated the parts that I know I can't do. That makes that you've now showed the bank that you understand where this thing fails, right? And that's 90% of the time it's management. I'm just not running right. And maybe that's not 90. Let's call that 50. The other 50 is I don't have enough cash in the bank, right? I didn't get enough from the bank, and I didn't save up enough to survive what you thought was going to be good, and turns out it took a lot longer. So that 50% profile, do I have the management experience? I think in thinking through where I fall short, filling it in the gap with people or resources that can help you to make sure you don't fail there.
So if a business owner is listening today and they're thinking, I'm going to need financing sometime in the next 12 to 24 months, what's the first thing that you would tell them to start doing tomorrow?
Clearly define how much you want, where you're going to spend it, how fast you're going to spend it, right? Like if it's, I need $1 million, but I don't need it for 12 months, then you don't need $1 million today, right? Understand that I'm going to planning for it. You can approach that, but how much do I need? How am I going to spend it? What category and what goes into that? And then why did I feel that that was actually necessary? So if you can do that practice in preparation, that will trigger a bank to immediately tell you, okay, if this is what you're asking for, here's the documentation you need to provide. They pull those numbers in, they start running the figures, and then they can start challenging that it fits with them. Like then you've got the little top parts of the Lego to see if it actually fits their Lego. If all is said and done, that's a terrible reference, but just go with it, Chris. You know what I mean? Like just are we simpatico, as they say? And I think that will help you. But if you can't define your request clearly, it will make it very difficult for the bank to figure that out. You don't want them to figure out what your request is. You want to give them clearly defined principles as to how you got there. Whether it's a startup, whether it's an expansion, I'm buying an asset, whatever it is, just get to the clear line of what do I want, how am I going to spend it, and why do I really need it? And I think that'll help just catapult you significantly farther ahead than most other people do to approach this.
Fantastic. Thank you, Shane, for joining us today. I really appreciate it. Can you please tell everybody how to follow you, connect with you on social, and get out to find you on the internet?
Sure. So you can go to our bank website, is the core first location. So that's leaderbank.com. Besides that, we will have lordsoflending.com. We'll have plenty of things that we're constantly updating. It's in the midst of transitioning underneath the bank umbrella, where we're going to be operating it. And then, of course, on LinkedIn. I mean, I'm very easy to contact on LinkedIn. Just look up Shane Pierson and you'll see me on there. Anything with Lords of Lending, if you type that in, you'll see me show up squawking about something fun and exciting. So,
how often are you doing new episodes for Lords of Lending?
We had a moratorium for a minute while we were in transition between the lenders. So coming up, I believe in mid-August, we'll start recording again. And so we'll probably have them as probably a weekly or more so bi-weekly at first, and accelerating into a more weekly podcast that'll come thereafter. 20 to 30-minute episodes. We're trying not to really put too much people to sleep talking about banker stuff. Like just we can get deep, and I apologize ahead of time. But if that's what you love, by all means, chime in.
Well, I think it sounds like an extremely helpful resource in terms of understanding what's really going on in the lending industry. You have surfaced some very interesting points that I think now all of us are thinking about with respect to the use of AI. And if we're not using it in our business, how we need to think about bringing that into our business. And if there is anywhere in our business that would, the use of AI would impact our plan going forward. That's not something we were talking about previously before. So you've given us some really great tidbits there. We really appreciate you coming in. And you've heard it, everybody. You really need to be, this is a subject you really need to be following along for. So get out, connect to Shane on social media, get out to the Lords of Lending podcast site, tune in for additional episodes, and go down that rabbit hole as often as you would like with him on his upcoming episodes. Shane, thanks again for joining us today. We really appreciate you being here. And until next time, everybody.